let's keep it simple. I think gold's going to pretty much be in a very boring range. I think the S&P is going to chop around and punish people that bought index funds. I think the Fed's going to get 2 rate cuts. The rates are going to adjust before the new chairman is put into place. And I think it's going to incentivize people to build a lot of stuff. And I think that right now is an unbelievable time to own certain components that are needed to build stuff in the U.S. It's totally overlooked.
E.B. Tucker joins the show once again. He is the founder and editor of the Tucker Letter. We'll be talking about the big, beautiful bill. We'll be talking about gold, silver, miners, the economy, his outlook on markets, life, everything in between. Welcome back to the show, E.B. Good to see you.
Thanks for having me. Nice to see you on a beautiful day in what looks like Vancouver behind you.
Let's start with the big, beautiful bill. The U.S. Senate Republicans narrowly passed Trump's big, beautiful bill today. After hours of stalemate, according to this BBC article, Republicans in the U.S. Senate have narrowly passed Trump's mega bill on tax and spending, meaning the proposed legislation has cleared one of its key hurdles. The One Big Beautiful Bill Act passed with Vice President J.D. Vance casting a tie-breaking vote after more than 24 hours of debate. Elon Musk had something to say about this. In fact, the feud between Musk and Trump reignited. Musk now threatened to back lawmakers who challenged this bill, and this is what Trump had to say about Musk potentially deporting him. Take a listen.
Elon Musk.
Who?
What happened to Elon Musk?
Nothing. He's upset that he's losing his EV mandate, and he's very upset about things, but he could lose a lot more than that. I can tell you right now. Hey, Elon can lose a lot more than that. I don't know. I think we'll have to take a look. We might have to put Doge on Elon.
Wow.
You know what really concerns me about that is it sounded like he said that somebody's going to lose the EB mandate, and I had to really say, what is that going to mean? But I'll tell you what, this United States, I mean, I don't have a television, and everybody's sort of always kind of confused about that because most people do have a television. But I mean, when I do get to see television, I'm mesmerized because I mean, the drama is unbelievable in the U.S. I mean, you have to really take a step back for a minute and think to yourself, I mean, this is so good it could almost be a TV show.
But the big, beautiful bill itself, is Elon Musk to be opposing it because he wants less spending, not more?
Yeah, it's hard to say, but if the EB mandate is in trouble, then we're really in trouble here at the Tucker Letter. But I'll tell you, the thing is that Elon goes down as one of the most savvy operators of our time, right? I mean, I don't know who to compare him to, but it's fascinating to watch him. I read his biography and I quite enjoyed it, but I think I see things a bit differently from most people. I'm not sure I take much seriously because usually what you're being shown on a television show is a produced show. And once you've been in television production or tangentially involved, you realize that these shows are for the masses, not really for the thinking. And I find that people are whipped into a frenzy over this stuff. And I'm not sure it really registers much in my decision making, which I'll tell you what, I split my time between Florida and New York. And I just love being in New York because people are so spun out by whatever the headline of the morning is that they just can barely think, they're so upset. And I just kind of tell them, as an unregistered voter, I'm not really sure what's going on. And they're even more spun out because they think that I should definitely be voting, 4 or 5 times if possible. But I don't really pay attention to any of this stuff. I'm not sure that Elon could be doing what he says or could be saying something and doing the opposite is one of those like a switcheroo trick, when you go into the car dealership and they're like, I'm not going to sell you this car, that type of thing, right? It makes you want the other thing. This is going on a lot of times too. But my advice is to completely ignore all these things. And if you have to watch it as if you're watching a sitcom or something, because that's what you are watching. And I'm writing, by the way, Thursday, the Tucker Letter comes out, and we're talking about this because it's halfway through the year. It's halfway through 2025, and I think people fail to realize that you don't have to wait until year end, to reassess things. You can at the halfway point. You say, what worked? What didn't work? What if we could do it over again, what would we do? Who would we listen to? Who was actually telling us things that did happen and who was telling us things that didn't happen? And this is the time to do that. So we're going to do that on Thursday, which I guess is going to be tomorrow when this airs. And people should have a read of that at ebtucker.com because we're going to talk about some of these people. One of the people in the video, not the guy that runs the car company.
What are your thoughts on whether or not inflation is coming back?
No, I mean it's like that's the whole deal. Is this is boogeyman? It's like people. It's such a basic and poorly understood concept. This inflation, like the things cost more at the grocery store, 1970s style. I mean, people got a little hung up on this, but it's not really true because some things cost more, and some things did not rise. Right, so everything in the U.S. has to go up for the system to keep moving. And so what you figure out is the trick is for it not to go up too fast. That's the trick. And so now they think they have it rising at a certain pace, like insurance has to cost more and the insurance salesman has to make more. And then the people, all these things have to happen at the same time. I just want to let you know, by the way, not all of these things are working. Like the Florida housing market is in really bad shape. I'm not asking for sympathy there. What I'm saying is that due to some of these costs and weak demand and problems with insurance and hurricanes and all these things, there's areas of Florida that are getting just completely bashed by the fact that people can't sell their house. And you're not seeing this in the national press, but it's really a good thing to study because what happens, when you buy something for $800,000 and it goes to 1.2, and then it's time to sell it, and you start chasing the price down, and the insurance costs have gone up, and the taxes have gone up, and all these things have happened, and you can't really rebuild the house because the building costs have gone up. You also can't sell the house because the person can't get insurance for it, whatever. This is something to pay attention to because it shows you it's a microcosm of the bigger system in the U.S. The debt bubble has to get bigger. It has to get slowly bigger, and the game of these people that are in charge, some of the people in that video, is to expand that bubble in a controlled way. Let's see if they could do it. You come back in 10 years, 5 years, and these numbers are all going to be bigger. And the trick is you got to make sure you own stuff that gets bigger. The problem is when your costs go up and your assets go down because you bought Canadian mining stocks and they went down when the cost of everything went up. That's the thing you don't want to do.
What is the kicker driving gold to? Let's talk about gold and silver now. $3,300.
That's an easy one. So I mean, the thing is that gold. What most people don't understand about gold, I don't know if they didn't read my first book or they can't understand, is that gold usually moves before the event that people think would make it move. For example, gold hit over 1,000 in March of 2008, 5 months before September of 2008 happened, right? So you go back to 2019, this was the case. Pre-COVID, it moved $200. All these things, these were big numbers back then, by the way. Now it's like 3,400 or something. I think this move, this 60% move really is what it is preceding what's coming out of Washington. And what's coming out of Washington is 2 rate cuts to normalize the yield curve and incentivize development, building, and investment and spending to keep this system growing. And gold sniffed that out. That's why Powell is out. That's why whoever goes in will do 2 rate cuts. We're going to show the chart of the yield curve tomorrow. You'll see that there's a reason they want 2 cuts. They're going to get 2 cuts, not 4 cuts, not listening to the market. The Fed does not listen to the market. It manages the U.S. economy. People got to get that through their head. This is not people studying, trying to help you, okay? This is trying to make sure that the system gets bigger but doesn't explode. That's what they're trying to do. Now, will they be successful? I don't know. I mean, eventually it seems like probably it explodes, but I don't think it explodes for a while. I mean, I think you should play their game for a little while. Like fighting that game has been a painful exercise for people that try to do it.
Okay, so where's gold heading from here?
I think we grind in a pretty boring range now. I think this move from 2,000 to 3,400, that's your move. Like that move happened in advance of the expansion that we'll see in Washington. And now we chop and flop through this little zone for a while. I would be stunned if in the short term this keeps going to 4,000 or something. I would be surprised this year. I would be surprised if there's more. I think that this, if you think about it, all this big beautiful bill, all these things, all these trillions, this all is happening now after the move in gold. All this stuff that you were reading before from that Bloomberg, excellently written Bloomberg article, the all this stuff, gold moved before all these things happen, if you notice. So I think gold sniffs these things out and it moves. And that being said, like if you have zero gold, obviously, it's always a good time to fix that. But if you're trying to play it for a move, I think you missed the big part of the move. It's that, and that's just me. I mean, I look at silver, people are like, is it going to go 50? Probably, but like, who really cares? I mean, like, it's the silver coin premium is so high that it's like, it's hard to get material amounts of silver. And then people say, what are the silver mining stocks? I mean, fine, there's a few of them, but there's not that many of them. And the gold mining stocks, they really didn't move. If you think about it, if you 10 years ago, I knew you back then, if you 10 years ago asked people at the gold conferences, what would $3,400 gold do to your business? They would have told you that, sky's the limit, right? But the gold stocks haven't really moved. I mean, so what if they've had, I mean, we own, two of them in the Tucker letter, but that's all we own. We own, physical gold as well. But the thing is that the move that they made is not what any of those people would have told you would happen with gold moving, to $3,400, like 60+% in a year. They would have told you that mining stocks give you leverage to go higher. It didn't work. So my point is, when you sit halfway through the year, it's a great time to think back on the year and say, what worked, what didn't work. Like, stop doing what didn't work and start doing what did work. And people don't do it. They just don't do it.
Are you more excited about gold or silver right now? Silver's at
I'm more excited about
$35.
my tennis game, which is evolving rapidly into a very good tennis game. I would say, like, for myself, I'm glad I own gold. I'm glad I'm not like monkeying around with gold dealers. I'm going to mention Thursday that there's been some really strange behavior in the gold dealer market. I mean, like, there's plenty of gold available. Like, some of the dealers have become quite shady. It's complicated. I'm just glad to not mess around with that. I'm glad I was
give
paying
us more details now
in the newsletter. Yeah, I think you want to be delicate about that because we don't want to but I'm going to talk about transactions that I've made that I've been surprised. I've been surprised of how they were handled. And I'm just glad that I was paying, 150 basis points on, Gold Eagle when gold was $500 and not 3,400. That's how I feel about gold. I mean, I think that, like, it's sensible to have some gold and to have some Bitcoin. When it comes to silver, I'm not really sure. I mean, I have a lot of silver. I'm not really sure I'd buy it again. And I also don't really understand why the silver people are so enthusiastic. Yes, I think it'll go to $50. Like, yes, I think $36.17 is too cheap, but it's also, like, incredibly difficult to store. It's really hard to get a hold of it. And, like, if something's going to move 50%, I think a lot of things can move 50%. And you don't have to like install, a vault in your guest room to store all the stuff.
Are you saying you prefer to buy gold in other forms right now, like paper gold?
Well,
ETFs, gold stocks?
In my first book, which I think is a pretty, for somebody that has no idea what's going on in the gold market, it's pretty good, is that, like, I actually do like both. I mean, the thing is that your physical gold is a lot harder to sell, so you're probably not going to sell that. But the paper gold is easy to sell. So the paper gold is, like, seamless. You're in, you're out, you do whatever you want. And so there is some logic to having that as a trade. That's something that I do. If I want to take a gold position, I'm not, like, calling up one of these shady dealers that, takes forever to send me the gold, sits in my cash for, 12 weeks, and then doing the same, when it's time to sell it, right? I mean, like, I can easily be I have opinions about the ETFs. I mean, I think it's kind of personal preference, but there are some of them that are pretty liquid and pretty easy. And I think that's a nice thing to do, whereas with silver, it's like, look, it's an industrial metal. look, it's fine to have it. I have it. I just don't know that I would load up on it again. I don't know if waiting 15 years for a 50% move is really something that excites me that much.
What is wrong fundamentally with the silver and gold mining industry right now versus the
Look,
bullions?
I'm not going to give you a solution on how to fix it, but I will tell you, having in the past been around that business, I can tell you that generally nobody in that business wanted any of my advice and continued doing the same thing that enriched them prior, and their stock prices have done about what you would expect. Now, this is not all the companies. Obviously, there are some executives, and mostly in Toronto, less so in Vancouver, that have decided they're going to run, profitable and responsible gold companies, and the stock prices have done okay. I just think you could have done a lot better having like much more liquid, like much easier to understand, much stronger trending stocks in the US, and you start comparing like the ease of buying, even the best gold miners with buying, like other stocks that we don't really get into details, but like there's lots of stocks in the US that have done fantastic. Their sales and their businesses have exploded. They've been story stocks. They've been plenty liquid. They've gone bananas, and you could have bought any of them. You could have almost bought like half a dozen of them and been successful with all of them. And you look at the gold market and you're just like, why would you own this? Like, I mean, the fact is in 2020, they had a move, okay? And they didn't really hold on to that move, and they have not really been shareholder friendly over the long term. And every time I say this, I get a nasty note from like one of the better CEOs that says, we've produced 15% annual returns. And I'm like, that's fine. I mean, like, I'm not going to name names, but like big liquid US tech stocks have produced, 50% annual returns over the same time. And they haven't been like digging around in, the middle of Africa and stuff and like having lots of risk, like that. It's the business is broken. It's totally broken. And I don't think it's going to get fixed anytime soon because I don't see any viable solutions that really adequately reward the shareholder. The other thing is most of the people involved make way too much money. There's too many companies. There's too many like crooked deals from rubber stamp boards that reward these executives if there's any sort of, change of control event. And the result is the stocks don't go up, David. That's the result. Like, what do we really care about here? We care about buying stocks that go higher. And many of those stocks don't go materially higher. And don't even send me, an ebtucker.com, comment that's like naming one stock that went up decently or something like that. Because the fact is that, most of those companies spent 15 years paying themselves excessive amounts of money, damaging their capital structure, and gold during that time went up a lot. Does this make sense? This is the thing I think people can't see. I mean, like AI comes in and gets big, AI companies get bigger. Gold gets big, gold companies get smaller. I mean, it's like, what's that about? Like as a shareholder, don't even worry about it. You're just like, I'm going to buy stuff that's going up. I'm not going to buy stuff that's going down thinking that it's going to turn around. I mean, the trend is what you want to buy. Stuff's going up, keeps going up. Stuff's going down, keeps going down. So like, it doesn't really take an advanced math
so the
degree.
the good miners, what are they doing that the miners
are there
bleeding
any good,
money are not doing?
We have two of them, and we bought them because of the chart. That's why we bought them. So like, the thing is that we didn't really, I think they're well run, but we bought the chart. That's what we did. We looked at the chart and we said, you know what? Charts are something you can trust because when you see chart action that's, moving up, that's what you want to buy. When you see chart action that's moving down, that's what you want to sell. And I think the deal is that they've been ultra disciplined and like they're making money. I think that's what the deal is. They pay a dividend, they make money. They haven't gone out and bought bizarre stuff. They haven't bought excessively speculative stuff. But you got to remember something, David. These companies are debt free. I mean, imagine in a world with $300+ trillion of debt, you're talking about an industry that's not allowed to borrow any money. I mean, largely speaking, it's a debt free industry. What does that tell you? It's like nobody's loaning these people money. So if you're a shareholder, be careful. Like, you're going to buy a stock that's going down that the company can't sell bonds. What's that about? I mean, it's just crazy. Doesn't make any sense. It makes you wonder, why do people even like it to begin with? They like it because there was this old idea from prior markets that if gold goes up, the stocks go up more. They have operating leverage. It didn't work, David. It didn't work. And that's what people need to see. It didn't work. So you want to buy things that work, and you want to not buy things that don't work. It's really hard for people to figure that out.
Let's shift gears now. I saw you at the Bitcoin Vegas conference. You were there.
Yes. Yes.
First of all, what was your impression of the conference? And second, what did it lead you to write this particular piece, The Church of Bitcoin, on the Tucker Letter?
Well, there is
a far out congregation. People need something to believe in. Without it, they revolt. All right.
It is a far out congregation, as you can attest to, having been in that sea of people. I will fully disclose that I bought more Bitcoin while at the show, while walking around, because I was increasingly stunned and amazed by what I was seeing. And so I kept buying more and more Bitcoin during the show. And what's amazing to me is the gold people can't accept the fact that I buy Bitcoin. The Bitcoin people can't accept the fact that I'm not like Bitcoin crazy, with like laser eyes. So no one, it's just, I feel lost, David. I mean, the way it looks to me is you're crazy if you don't have some tiny percentage of assets in Bitcoin. That, to me, it's like, okay, I was looking the other day, like all the Bitcoin I've bought.
When did you have this revelation? This is the first time I've heard you say that.
Yeah, I mean, I would say I started buying it in 2023, and we put it in, we started writing about it in the newsletter at the very end of 2023. And it's crazy because a lot of people are pretty nasty to me about the fact, and I say, look, it was like in the $30,000 range when I started buying it. And people are like, well, that's not good. And I'm like, what do you mean it's not good? It's like $107,000 today. And like, it's only a 2.2 trillion market cap. I mean, 2.2 trillion is not that much. It's really not. I mean, gold is like way over $20 trillion. It's kind of like wild to think about. So I think it's sort of nuts to not own some Bitcoin. Now, the Bitcoin people don't like that attitude because they think that I'm just a mercenary that only wants to own things that are going to go up in value, and I don't care about their movement, which is crazy because I don't care about anyone's movement, David. I don't even vote in the United States. I'm not involved in any, groups of any kind. I'm some sort of like lone observer that's rolling around trolling the Bitcoin conference when I ran into you. And so to me, it's like I want to buy stuff that I think is going to go up in value. That's it. Like, I don't want to change the world. I don't want to revolutionize stuff. And the Bitcoin people, they don't like that. They want you to basically be so deranged that you're like, I'm never going to sell. I would definitely sell Bitcoin. I mean, I don't want to sell it now, but I mean, I don't care about pretty much I would sell anything, David, to be honest with you. It's like everything is eventually for sale.
The fact that, like you mentioned, Bitcoin's at $2.2 trillion market cap, gold's at over $20 trillion. The fact that people have been telling me over the years that Bitcoin will eventually catch up to gold in market cap size, does that logic make sense to you?
Know,
I mean, from my perspective, gold's just a bigger asset class, right? So I don't know why to compare it.
I'm not sure I can get down with the whole asset parity thing of the two things. I think that's a little bit of a stretch, and also considering that's a tenth right now. I mean, it's like an eighth or something of because the gold's like I haven't run the numbers, but I think it's like 22 trillion or something like that, maybe 23. But the thing is, I'm not sure that I'm making that bet that there's going to be parity. I think a much more logical bet, and let's just be very hypothetical here, is let's just say you had like 6% of your assets in gold, and you had 3% of your assets in Bitcoin. I think the 3% might become 6%. Then you might have some sort of like parity, And the Bitcoin people are so aggressive towards me when I say that, because they're like 3%, you need 100%. And I'm like, what's the point of that? I mean, it's like, it doesn't make any sense to me. I mean, I met those Winklevoss twins there, talked to those guys. I mean, that was weird. One of them has like a blinking disorder, so it's very difficult to take a picture with them. But they're giving away an orange Cybertruck and this DJ with like a moon suit on and stuff. It's totally crazy. I highly recommend people go to the Bitcoin conference. I've never seen anything like it. I mean, the gold conference, what you got to do is go to a gold conference. It's a sad state of affairs. Really sad. It's very small. Like, they've closed off most of the conference. It's quiet. It's somber. Maybe they have like a minimal amount of entertainment for you. Definitely not going to have an open bar. None of this stuff. Then go to the Bitcoin conference. It's hard to find the conference because there's DJs and dancers and fog machines and live bands and a spaceship. There was a Formula One car. You could change the tire on it. There was people on the ceiling. There was Steak and Shake people dressed as cows walking around. It was crazy. There was a punching bag competition, a guy with a chicken suit on. I've never seen anything like
that. Does this signal the top to you, all this stuff?
David, it would be the top if I was hearing people say at the Racket Club how much they were buying Bitcoin with all their assets. And I don't hear them saying that. I hear them saying that they're talking about stocks. That's all they're talking about, stocks. Can't even get on the court without having to answer a stock question. It's very annoying. I don't hear them saying, I just got all my money in the Bitcoin. I think this Bitcoin crowd can get bigger. That's what I think. I think it can get bigger. I think it will get bigger.
EB, let's finalize our discussion here. What are you most excited about when it comes to asset classes right now? What are you most looking forward to in 2025 for the remainder of the year? Which assets will grow? Which will not? I know that's several questions in one, but I think you get the idea.
Let's keep it simple. I think gold's going to pretty much be in a very boring range. I think the S&P is going to chop around and punish people that bought index funds. I think the Fed's going to get 2 rate cuts. The rates are going to adjust before the new chairman is put into place. And I think it's going to incentivize people to build a lot of stuff. And I think that right now is an unbelievable time to own certain components that are needed to build stuff in the US. It's totally overlooked. It's massively consolidating. There's huge amounts of acquisition activity going on in that business. And it's just such an easy trade. And I think you can buy companies and make money, and you can buy the best companies. And these are real companies. It's not like buying, something obscure. And we're doing that in the letter, and we're talking about it. And I think we're up in these trades. And we're going to be up a lot more second half of the year. That's what's going to happen.
Excellent. All right. Where can people find the Tucker letter?
ebtucker.com. You can read for free. You can join up. There is no advertising. There's no marketing. There's no banners. There's nothing. It's only me. It's a direct note from me every other Thursday at 9 a.m. We're never going to bother you. And I'd rather be dead than send you a tacky marketing email. Okay. So read, join up, follow, enjoy, comment, disagree. Just get over there. ebtucker.com.
Okay. ebtucker.com. We'll put the link down there. Make sure to follow EB there. Welcome back to the show. Good to see you,
Thanks.
EB, and we'll talk again soon.
Okay. Hope so.
And thank you for watching. Don't forget to like and subscribe.